Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Please don't forget to like and subscribe and click the bell so you get a notification of when we release a new video. So I had a few messages from people who indicated that I was missing last week, but I thought that Billy and Michael had a great conversation. I was away on a bit of leave, but I'm welcoming Michael again into the hot seat.
Morning, Robin. Cold seat.
Yeah, the cold seat. Yeah, it's not too bad this morning. Michael, you know, we kind of have talked about this and we've seen sort of glimpses. It feels a bit like there's a door being opened and we're just getting a shaft of light come through. So we saw that the inflation numbers in the States looked a lot better than expected, and emerging market currencies boomed, international markets rallied. It's going to be closed again before we fully see that light through the door, isn't it?
Yeah, Robin, I do think we're getting probably closer to the Federal Reserve being comfortable that they're going to start cutting rates. So yes, inflation was a bit better. Everybody was expecting sort of 3.1%. I think it came at 3%. So that 0.1% of the difference actually means quite a lot in financial markets. It might seem irrelevant to the man in the street, but to financial markets it means quite a lot. And so along with some testimony from the Federal Reserve earlier in the week and last week, there's definitely we're definitely inching towards a rate cut in the US. There's no doubt about it. And I think the odds are now that there will be a September rate cut.
Yes.
And I think that's really important from a couple of things. Well, in the US, I do think that the economy is slowing down. So we're about to have US reporting season. So bear in mind, US companies report every quarter.
Yeah.
And they actually kick off today with two of the banks, Citibank and JP Morgan. They're always the ones to get the ball rolling. And so I think over the course of this reporting season, it'll be quite interesting to see how companies are responding or what their commentary is around a slowing economy and things like that, because there definitely is evidence of the consumer side of the economy slowing. So I think a rate cut from that point of view will be quite welcome. I'm just concerned a little bit on the one side that the markets are so excited about a rate cut, but actually they're not really focusing on the fact that things are slowing down, and we actually need a rate cut. It's not it's not a nice to have. It actually, the Federal Reserve is almost leaving it a bit late, but inflation's moving in the right direction, which is a good thing, and there is room for a cut. I think what's really exciting, important out of that is that it opens the door for us to have rate cuts too, because the rand is trading at 18 to the dollar this morning. It has, obviously it's a little bit volatile with everything that's going on in the world, but since the election it generally has trended stronger. And if we can sort of hold around the 18, maybe even into the sort of upper 17s, petrol prices have come down quite a lot. I mean, the oil price has sort of been ticking up because there's a little bit of other stuff happening in the oil market. But, we should see petrol prices continue to moderate. And I think it really opens the door for our Reserve Bank to cut by September as well, which is very much part of our investment case for our own local economy.
So, I mean, we're just getting a glimpse of what the trend could be once US rates start going down, and there's optimism from a South African point of view, rand, and even, I don't think it really matters whether the GNU does much as long as the trajectory continues as it is. We could have a very good summer, shall we say? Yeah,
Robin, I think, obviously the implication that we said, right, even this at the end of last year was sort of interest rates being cut, a weaker dollar, stronger rand. So that's obviously sort of coming through a little bit. Stronger commodity prices, which is also good for us. So the gold price is over $2,400 an ounce this morning. Some of the other commodity prices are sort of ticking up. That's generally good for us in terms of our terms of trade as well. So that it's not only good for the mining side, but it also feeds back through to the currency. And yes, Robin, sorry, I just completely forgot what I was going to say. Apologies, it's Friday morning. But yes, it really does feed through to rate cuts for us in our economy towards the end. And I think, from the Government of National Unity, I don't think anybody's expecting a quick fix, Robin. But I think that the starting point for better times in SA is to see those business confidence indicators moving up. If we see that business confidence is starting to improve, I think that is the earliest signal that we're going to get that things are going to be different, because it's going to require business to start investing and to be believing that the future is different. And listen, you've got to give credit on the sort of load shedding. You know, we've obviously had an extended period without load shedding, which you're also coming through in the confidence numbers.
Yeah.
You know, yeah.
But international tailwinds certainly won't
harm. Definitely not. We've had a lot of headwinds, so it'd be nice to have a couple of tailwinds at a time when we're doing a little bit of self-help as well. You know, which if we're not shooting ourselves in the foot, that's also quite pleasant, because we normally do take the shotgun, line the foot up, and blast all the toes away.
Michael, just very quickly before we wrap up, last night Mr. Biden put his foot in his mouth properly, didn't he? Tell us what happened. It really is looking more and more like we might not have Biden running against Trump. It might be someone else.
Yeah, you know, Robin, I mean, we laugh and joke in this country, and we have a good sense of humor in this country, and we'll all remember the Zuma years where, you know, it's listen carefully and 1170,100, whatever, you know, remember that famous speech that Zuma gave. But last night, on the edge of the G20 summit, Biden was giving a speech, and he called on the president of Ukraine, who he described as a very determined, valiant individual, and then he said, you know, with no further ado, please welcome President Putin.
Oops.
Yeah, that's probably one of the biggest gaps you can make in international relations, I would have thought at the moment. And then following in hot pursuit after that, he basically referred to his vice president Kamala Harris as Trump. He said, you know, my vice president Trump is is not capable of running the country. So he said something to those effect. So basically, he's basically not endorsing his vice president, which is probably strange. Yeah. And then he got the name wrong and called. So really, I mean, you know, it's he's digging in his heels, and he's saying no, he's perfectly fit and happy to carry on. And well, not happy, he's determined to carry on. But sure, the pressure's certainly mounting for some sort of change there, because it's you can't have those kind of things on the international stage.
No, you can't. Yeah. Well, Michael, thanks for giving us those insights. Thank you for tuning in. We'll catch you next time. Bye-bye.